Let me also welcome Shivangi Sharda, who is joining us on the show right now, as well as we also have Ashi Anand on the show. A very good afternoon to both of you, and thank you so much for your time. But Shivangi, let me come to you first to have your take on Dixon Technologies, because I believe as a house you track this stock very closely. And off late, with this whole US-China tariff war coming in, this is one of the sectors that is expected to be beneficiaries, and we have seen the news flow around. But on the technical front, where do you see Dixon Technologies headed, Shivangi?
Having me. So we've seen that Dixon Technologies has come out from a sector which hasn't moved very much in the last 2 to 3 months. But overall, there has been outperformance here from the last 1 month, 1 odd month. So of course, there is tailwind which this stock is carrying. Uh, from the last 2 to 3 sessions, specifically, price volume surge has been quite remarkable, and from the last 3 weeks, we've seen a very sharp comeback of the bulls in this stock, which was earlier very lackluster. So, of course, this momentum is going to continue, and technically speaking, there is a lot of open interest activity that is happening as well. So, looking quite positive for around about 17,250 odd levels. And a good support could be watched out at 16,400 level.
Okay, that's that on some of the buzzing names. Ashi, hi, afternoon. What's it looking like in the market? And seems like clear leadership from within banks. Anything that you may have added in your portfolios of late?
Sure, hi. Actually, our portfolio has been fairly stable. We've seen quite a sharp bounce back from the lows. Our kind of view is that the market outlook hasn't, while there are clearly certain things that have improved. RBI has cut rates. RBI is also easing up on liquidity. Oil prices are down. And the kind of tariffs have been kind of paused for a certain period of time. We don't yet completely believe that we are out of the woods with the kind of current rally back from the lows. You are now just kind of about 7 to 8% down on the large cap indices from the highs, about 15% down on small caps from the highs. Given the fairly aggressive bounce back, I think we continue our kind of fairly moderate or conservative stance. We have about 6 to 7% cash across both of our portfolios. We're just kind of waiting to kind of see how news flows develops. We are importantly kind of just keeping a close eye on corporate earnings to see the kind of outlook on earnings going forward in the coming year before we really go in and look at deploying this cash. So at least as of right now, there've been no major changes at the portfolio level.
All right, but with this, let's move on and let's put the spotlight on shining gold, because that has definitely created history. And if you wish to buy a gold, 10 grams of gold rather, then you have to pay over $1 lakh for it in the physical market, including GST. The big question is that what is fueling this rally? Let's get in Ashesha, who is here with all the details of what exactly is happening when it comes to gold as a commodity.
Well, yes, gold has indeed created history, and as you mentioned, it has crossed that 1 lakh rupee per 10 gram mark in the physical market. So the last traded price stands at about 98,900 rupees for 10 gram, and with 3% additional GST, the price stands at about 1 lakh 2,000 rupees for 10 gram. Several factors leading the move, but let's also talk about global prices, because in the global market, gold has crossed that $3,482 per ounce mark, and in the last just 2 days alone, gold prices have risen nearly 2.5 to 3% on a year-to-date basis. Gold is up nearly 30%, which is more than the returns gold had given last year in dollar terms. In calendar year 2024, gold was up 27%. This was followed by a 13% return in calendar year 2023. Latest trigger, of course, being the commentary that came in from US President Donald Trump with respect to Jerome Powell and with respect to commentary on interest rate environment and tariff war, which continues to escalate. Geopolitical tensions, and central bank continues to buy gold globally. So these are some of the factors which continue to aid the move that we are seeing in the yellow metal. But apart from that, despite the up move that we have seen, global brokerage houses continue to remain very positive. Goldman Sachs continues to remain positive. They've given a target of $4,000 per ounce by mid 2026. And apart from that, monetary easing is also expected to be a positive, and traders expect at least 3 rate cuts in this calendar year. So several factors aiding the move, but for now in the domestic market, gold prices have crossed that 1 lakh rupee per 10 gram mark on MCX.
Okay, that's Darren Gold. And Kunal, you've been telling us for a while right now that better than equities in the near term is actually gold. How much more can it go from 1 lakh?
No, not better than equities,
Almost
of
there.
course, yeah. But yeah, almost there. 1 lakh. This is a phenomenal move. Completely,
Yeah.
I think, taken many of the people off guard. Because, I think, I remember, I think from 83, 84,000 when gold was trading at those levels in February or March, there was a point where, there was expectation that maybe gold prices would probably have hit the roof and we could be looking at, a bit of a correction or a reversal of sorts, but that's not happened. And I think now the momentum is extremely strong. I looked at the historical instances when gold prices, they generally tend to top out or at least show signs of extreme overbought. That generally happens when you see quarterly RSIs for gold, both in terms of dollar as well as in terms of the rupee prices, hitting levels of 90 plus. Right now we are still at 86.5 to 87 on the RSIs for gold on both these rupee as well as on the dollar terms. So I think that generally indicates that there should be more room on the upside for gold prices to move further.
All right, so there could be some more headroom for the gold prices to move higher. But amid the uncertain and the volatile times in the markets, the only asset class that's managed to retain its sheen is gold. But amid the record peaks, is there merit in exercising some caution? Is a correction in sight over the near term? We spoke to a whole host of voices, from Chris Wood of Jefferies to Enam Holdings, Sridhar Shivaram, all going long on yellow metal with sounding warnings against a near-term correction. Let's go across and listen in.
I think gold could have a big correction at any time, but I think gold will be higher in a year's time. I would advise people with long positions in gold to continue to hold and just take profits at the margin. Obviously, if you own gold on leverage, you should take some profits, but gold's trading very well.
So what we were trying to say with the gold long was that, bad behavior has its consequences, and people start to lose faith, especially in the currencies that central banks and governments are printing, paper money. So it was time to be much, much more aligned with the old-fashioned currency, the one that doesn't get printed out of existence, and that's gold.
I own gold and silver, and I bought more silver recently. Silver's still depressed. Those are two of the few. Well, I'm not buying gold because it's making highs. I hope I never sell my gold. I hope that my children own my gold someday. I am not selling my gold, even though it's making all-time highs.
Gold is extremely expensive in any metric. Of course, you guys all putting out this charts that, Nifty has, of course, underperformed gold for last couple of 2 decades at least. So very, very expensive for a zero coupon infinite bond. It's very expensive. From an allocation point of view, it's time to be sort of super, super concerned about gold valuations now. So I don't think it's a time to dial up gold in any meaningful fashion.
Gold is up almost 50% in the last 1 year, despite the correction that we are seeing. You can't have an asset class keep going up, one way. I'm a big bull on gold, but I'm saying that it's gone up too fast, too soon. So there will be some correction, but over a period of time, I'm still bullish on gold, that this is an asset class which will do well, but it can't go up 50% every year.
All right, so those were the big voices when it comes to gold and where is that headed. But let's get back to the markets, and what we are seeing is a bit of a resilience that at least the index is showing in today's trading session. But on the flip side, it's the two-wheeler counters that are a bit under pressure. Stocks like Hero MotoCorp and Bajaj Auto are a bit under pressure on the back of the Jefferies downgrade coming in. But Ashi, I beg your pardon, what's your take and what is your preference looking like when it comes to the two-wheeler counters?
So two-wheelers is a space we honestly aren't very positive about. It's very important to kind of understand that when you are buying a company, you're buying a future set of cash flows. If you understand what's happening from a slightly longer term perspective in two-wheelers, this is a space which is going to see the most rapid transformation towards EVs. And I think the longer term competitive dynamics of EVs is still unclear. You don't really know how longer term market share dynamics are going to pan out. You don't know how profitability is going to pan out in the longer term. So two-wheelers is really a space where over the last kind of decade and a half, These companies used to have very high profitability levels, very strong cash flows, a fairly kind of a stable competitive kind of scenario between Hero, Bajaj, and kind of TVS are dominating the entire space. But as you're getting into kind of EVs and EVs becoming a larger share of the overall market, you are going to get new competitors coming in. They will take in kind of market share, and as kind of different people are trying to battle to kind of gain market share, pricing and profitability is both going to get impacted. So while they can clearly be shorter term trading plays in the space, as demand kind of comes and goes, from a longer term perspective, we see this as a space which is likely to see structural derating.
Right, interesting. That's the take coming in on what the two-wheeler space is seeing. And Ashi, can't help but ask about IT. I mean, yesterday almost seemed like one of those freak days when you had even some negative numbers absorbed very smartly by the street. Do you think a turnaround, at least for stocks, could be around the corner, not as much earnings?
Dependent on how the entire US kind of macroeconomy, trade tariff, what Trump is doing, all of that pans out. At this point in time, the levels of uncertainty are exceedingly high. You've seen very sharp corrections across IT companies over the past kind of 3 to 4 months, and this is corrections of kind of stocks that hadn't really moved earlier. So valuations are kind of exceedingly cheap, but they kind of take into account this overall uncertainty around the kind of US economy. Now, one of two things could happen, right? As in, either you have this kind of trade tensions kind of continue, and what happens with US and China is going to be extremely important, because that would have an impact on the overall economy, not just US and China, but global. If those trade talks don't kind of start and kind of don't ease down at some point in time, we believe IT could continue to underperform. But if you start to see some respite, given how oversold they are, there could be a bit of a trading pop that there is in IT. So it continues to be a space which is very good from a longer term perspective in terms of the quality of the companies, the profitability, free cash flow generations, etc. But you have a combination of an uncertain near-term kind of US economy. Corporates are accordingly kind of going slow in terms of discretionary spends. And there is a bit of a longer-term overhang in terms of the impact of artificial intelligence. So I think until the US kind of outlook doesn't improve, the space could kind of underperform.